Hey guys, welcome back to the Wall Street Bull. Anthony here. I hope you're all doing well and staying safe out there. Big shout out and thank you to every single one of you who have subscribed to the channel. I really appreciate it. If you're new, make sure you smash the subscribe button down there. Turn on that little bell notification as well. As you can see right here, I love documenting my journey with investing with cryptos, dividend stocks, growth stocks, talking about passive income, building financial freedom, and yes, my goal at the end of the day is to build generational wealth. So come along this incredible journey. Things are just getting crazy this year. Also, if you can give this video a thumbs up, watch it straight through. It would really help me push this channel out to a lot more people because the YouTube algorithm is absolute magic when you find, ladies and gentlemen, do that. All right, let's get straight into it. Please do not take what I say in these videos as financial advice. I am not a financial advisor. You need to do your own research and due diligence. Me, my number one golden rule with any investment that I do is I only invest what I can afford to lose. Yes, we don't like to lose. You can lose money very fast, especially with cryptos and certain stocks as well. So please be careful out there. Don't take what I say in these videos as financial advice. All right, formalities are out of the way, ladies and gentlemen. Today is going to be a dividend stock portfolio update. Got to be itchy nose. I haven't done an update for a while now. I have been dollar cost averaging into my stock portfolio every single week. I also have been reinvesting the dividends that I'm being paid as well. And my portfolio just slowly is growing every single week, which is really nice to see as well. So we'll get into this. Here is my portfolio. It is in US dollars. There is a referral link below for stakes, so please feel free to use that. You can get $10. You can get a stock. I'm so used to cryptos. You can get a stock in GoPro, Dropbox, or Nike. And yes, I've got a significant amount of GoPro, Dropbox, and yes, I did get one in Nike as well. Please do your own research though with stuff and be careful. All right. So as you can see here, $38,512.92 USD. Obviously, the US dollar is worth 20% more than the Australian dollar. So my portfolio is hovering around the $50,000 to $51,000 right now in Australian dollars, just putting it out there. I've seen a total return of the day on Friday. Obviously, stock market is open between Monday to Friday. That's it. It's not open on weekends. And obviously on Friday, I've had a 0.82% return. In total, though, I've had a 31.55% return, which is $9,237 USD returns, which is absolutely incredible. And the reason for that is obviously because of the situation that happened in the world 2 years ago. I bought through that crash. If you look on any stock market or any chart, you'll see the crash happen in 2020. I've dollar cost averaged ever since that crash, and I've seen some incredible returns. My biggest gainers are obviously ExxonMobil, given the fact that oil prices were literally below zero at that time, and obviously oil prices have gone skyrocketing right now as well. So I'll go through my portfolio and what I'm obviously receiving in terms of dividends, because I think that's very important as well. You can see here my top positions right now, obviously ExxonMobil. I like ExxonMobil because I've seen some incredible returns, and also the dividends are beautiful. It has a dividend yield at the moment. Sorry, the price is $83 a share. Obviously, in the last year, it has gone up significantly. You can see on June 2021, the price was around $50 to $60, and now it's just gone up to $83. The dividend yield is sitting at 4.26%, which again for me is not that high, and in that range between 3 to 5 max % in dividend yield. And the reason for that is because obviously, companies that have a much higher dividend yield have a risk of cutting that dividend out. And I like the passive income from dividends. And obviously the lower it is, they're reinvesting that money back into the company. For example, Apple has a very low dividend yield. So again, they're reinvesting back into technology. All right. So I've currently got $8,609 US in equity here on ExxonMobil, 103 shares. Again, I've been dollar cost averaging into this. I've seen a total return of 68% on my money, which is incredible. My other big position right here in dividend payer is Sphd. This is an ETF. So again, it's a basket of stocks. So I'm diversifying by buying Sphd. And obviously, it's a very low cost ETF as well. So the management is very, very little. It has a 3.30% dividend yield, which is nice. I've seen a total return of 20.35% on my money, which is incredible. $870 US. My equity right now is $5,149 US in Sphd. And in the last year, it has seen an uptrend as well. Very, very nice. So again, Sphd for me is a monthly dividend payer. So I see dividends literally every single month, which is nice. Obviously, some other ones that I am very bullish on, obviously, is Ford. I think Ford is going to be an incredible company as well. It's $16 right now. It has a dividend yield of 2.37%. I have got 4.7 shares of Ford. I'm looking to add more. I've just been heavily focused on my crypto investing, so I am needing to obviously keep up to date with my stock investing. Ford for me and the electric car space is going to be a big sector in the future. I've seen so many people saying that petrol cars are going to be non-existent, pretty much in the future, next couple of years, if not now. I know that for a fact that Porsche have stopped making petrol cars, which is incredible, and are now moving to electric vehicles. A lot of companies are going to be doing this. We're going to see the fossil fuels get phased out. So Ford, again, is a big company. They've got, their Mustang coming out in Ford, a lot of SUVs. And I think a lot of car companies are going to start moving towards electric vehicles. And $16 right now is incredibly cheap. Some other companies, obviously, for me are Intel. Again, it's one of the very few tech companies like Apple that pay a dividend, which is nice. 2.95%, and I believe it's $48 right now USD. I think it's incredibly undervalued. I currently hold 11 shares of that. My equity is sitting at $533. And again, a lot of the world in the future is going to need a massive demand for microchips, and Intel is one of the biggest out there, obviously, as well as Nvidia and AMD. Just putting it out there, I like Intel as well because it's been around for a very long time. Obviously, some other ones here that my biggest positions are EPD as well, which is a midstream company. So here you go here. $25 a share of EPD. This is Enterprise Products Partners. They handle the transport of gas and natural, obviously petroleum and all that. They are a midstream company right now. The dividend yield is 7.21%, which again is quite high, but again, I like the dividends, and I think obviously this is going to be a stable company considering the fact that they're a midstream company and not a major supplier of oil and gas. They are a transfer company. So again, the middleman. I'm sitting on $1,785 USD in equity right now, 69 shares of this, and again, 13% return on my money in the last year, which is really nice as well. And some other ones I'm looking at, obviously KMB, which is Kimberly-Clark, I think is a no-brainer. There's obviously the stock price is quite expensive for us Aussies here right now at $125 a share. They've got a 3.77% dividend yield, which pays out quarterly as well. I've got 5.3 shares of that at $670 in equity. KMB, again, is definitely one for me. What other ones here, guys? At&T. I know a lot of people don't like At&T for the fact that they're cutting their dividend. I don't think it's that bad, though. And I think At&T has been very undervalued, and a great time to buy it because it's a cash generating machine. They're obviously got Discovery and Warner, their HBO, online streaming, the internet, their phone services. I think At&T is an incredible company. $23 a share right now. I currently have $1,844 in At&T. I've seen a negative 11% return, but I'm not worried about that. I'm in this for the dividends. The dividend yield is 4.7%. 76 shares of At&T, so that's one of my biggest positions as well. Now, if I go to this, obviously my dividend portfolio tracker right here, I'm not affiliated with this app. It's incredible, tracks my dividends on a yearly basis. There's a link on the iOS store, so please look at that. Obviously, you can see here my dividends are $1,703 Australian a year, which is really nice. The monthly dividend yield on average is $141. Daily is 4.67 cents, so $4.67, and the yield is on average 4.31%, which is not too high. In 2 days, I'm due to receive a dividend from KMB, which is Kimberly-Clark, at $8.29. Here are my top 3 dividend pays. If I open this up, ExxonMobil pays me $486 a year, SPHD $223, EPD $171, O Realty's $140, At&T's at $113, Prospect Capital $100, VYM $81, so on and so on. So again, it is a cash generating machine. I simply just reinvest those dividends, which I do with all my companies. Now, my goal, I've got $100,000 in dividend income. That is a major stretch. I've reached 2% of that right now. And again, I will hit this eventually, guys, but it just takes time. It's a lot slower than cryptos for sure. Sorry, here's my portfolio in Australian dollars. So $51,256.64. These are all my holdings right now. And if you scroll right down to the bottom, which I love on this app, I'll show you. At 10 years, if I didn't even invest $1 more of my own money, just reinvested the dividends paid by these companies in 10 years, the portfolio is going to be worth $80,900. It'll pay me $5,200 a year in passive income. Now, the beauty about compounding interest, Einstein said it's the 8th wonder of the world. This is what happens. Reinvested dividends, the portfolio is going to be worth $234,000. It will pay me $25,000 a year in annual dividends, which is about $300 to $400 a week. That'll continue to grow if I reinvest the money. Just keep reinvesting it. Don't take it out. The thing about dividend stocks is obviously you need to be aware that you can't take out the money. You have to reinvest the dividends that come out. So that's basically how you grow the portfolio. If you take the dividends out, you're not going to be growing and compounding your portfolio. Straight up. That's pretty much it for that. If I go to the monthly income again, my average is $137. And obviously, yes, I'm building up my low months, July, October, and January, and April. So April's going to be a low month for me. You can see here, this month in April, I'm due to receive $58. And obviously May is definitely a big one. June is another big one. My biggest month is obviously going to be in December, which is $221 in the month, which is nice. I mean, who doesn't like receiving completely passive income, $200 a month? I mean, yeah, it's not a lot, but again, it just continues to grow. So that's why I love dividend investing. Now, just one thing I want to point out as well for those Aussie stake holders as well, I just bought into a company on the Aussie Stock Exchange, the ASX. This is a sleeping gem. Here you go. So this is my Aussie stock portfolio as well. I did buy a company called AZI, which is Altman Group. Have a look at this company. Just putting it out there. It is very early. I've seen a 34% return on the day. This is the company right here, Altman Limited. So the ticker is AZI. I have invested in this company because they are going for minerals and natural resources for batteries. I think it is a sleeping gem right now. I like the project as well, so that's why I bought into it. The only thing I don't like about the Australian Stock Exchange is you need a minimum of 600 Australian dollars for your first purchase within that company, and then after that you can buy whatever you like. It's just for whatever share or stock you buy in the Australian Stock Exchange, you will need to purchase. The first one is going to be $600, so that's annoying. Unlike the US Stock Exchange where you can put like $50 to $100 of whatever you want to do, the Aussie Exchange, minimum 600, so that's pretty annoying. But again, AZI, have a look at the company. I have invested into it. I think it's going to be a massive project. And again, it's sitting at 0.092 cents right now. This easily could be $1, if not $2 stock right now. So check it out. Do your own research though, not financial advice. It's definitely a sleeper. Anyway, that's pretty much it for the update today. Let me know in the comments below what you think about dividend stocks. Are you looking into it? Any questions, DM me on Instagram and Twitter, and make sure you follow me on those platforms, all right? Stay safe, everyone. Peace. Bye.